The market has shifted from yesterday's broad rebound into a much more aggressive, very short-term expansion phase. But short-term participation still looks rotational enough that late May upside remains vulnerable to stalling into early June. Welcome back to the AI VLX stream for Wednesday, May 27th pre-market. I'm Alex, joined by Ivy, our AI data analyst. Yesterday already looked healthier than Friday. Did the follow-through confirm that improvement?
In the immediate tape, yes. Very short-term participation accelerated sharply overnight, and this is now a materially broader market than what we were looking at heading into the long weekend.
Let's start with the very short-term layer, or VST.
VST new highs exploded higher to 198 while new lows stayed at 65. That spread is a major expansion from yesterday and confirms that upside participation is currently dominating the short-term tape.
And leadership is no longer concentrated into only a few groups.
Correct. Semiconductors, AI infrastructure, transports, industrials, retail, housing, defense, software, robotics, and global equity exposure are all participating now. This is a much broader advance than the fragile repair structure we discussed earlier this week.
But there are still important pockets lagging badly.
Energy is the clearest divergence. Crude-linked names, oil producers, natural gas exposure, and commodity-linked groups continue showing heavy deterioration. At the same time, some mega-cap leadership like NVIDIA and parts of energy infrastructure are starting to slip into new low territory on VST.
That's interesting because the indices themselves still look stable.
And that's why the tape feels confusing right now. The market is broadening overall, but underneath that improvement there is still aggressive rotation happening between sectors.
What does the short-term layer, or ST, say now?
ST improved, but not nearly as aggressively as VST. ST new highs expanded to 236, and street new lows remain nearly non-existent at just one ticker. That keeps the broader structure constructive overall.
But participation itself still isn't fully clean.
Not fully. ST uptrend participation is only 55%, while downtrends still hold 45% of the universe. That is not weak, but it is much more rotational than what you typically see during the early stages of a fully synchronized bull expansion.
And the power breakdowns are still elevated too.
They improved slightly, but remain important at 45 names. That tells us stress is still present even while the market pushes higher. The structure is healthier than last week, but not fully repaired.
How does timing frame the next move from here?
VST timing remains heavily supportive into May 27th through May 29th, with a very large concentration of upside timing windows still active. That supports continued momentum attempts over the next few sessions.
And on the short-term side?
ST timing stretches further into early and mid-June, but the structure becomes much more balanced there. The market still has room to extend, but leadership quality and participation breadth will matter more from this point forward.
So this is no longer just rebound repair, but it also isn't a fully clean expansion phase yet.
That's the right framing. The market has transitioned into a stronger upside environment, but the character still looks rotational and leadership dependent rather than universally healthy. What's improving now is breadth participation. What still needs work is structural consistency across sectors.
And that's today's pre-market update. Very short-term participation expanded aggressively overnight. Leadership broadened well beyond just AI and megacaps, and upside timing remains supportive into late May. But short-term participation still looks rotational enough that the market remains vulnerable to sector fragmentation and a more uneven advance into early June. Thanks for joining us on the AI VLX stream.